Right now, there are 7 bills that seniors in this country are legally entitled to pay nothing on. 7. And the shocking part? Millions of retirees are still paying every single dollar, every single month, because nobody told them they didn't have to. I'm not talking about coupons. I'm not talking about senior discounts at restaurants. I'm talking about Medicare premiums, property taxes, utility bills, prescription drug costs, federal income tax on your Social Security, real bills, hundreds of dollars a month, thousands of dollars a year. The average retired couple overpays by $14,400 every single year on bills they were either legally exempt from or could have dramatically reduced with programs that already exist, that your tax dollars already fund. Now here's what's going to surprise you. Your bank doesn't tell you about this. Your Medicare plan administrator is not required by law to tell you. Your county tax office will not send you a letter. That's not a conspiracy. That's just how the system is built. Every dollar you don't claim in an exemption is a dollar that stays in someone else's budget. In the next 18 minutes, I'm going to show you all 7 of these bills. I'm going to give you the exact law names, the income thresholds, the deadlines, and the specific forms you need. I'm also going to tell you about one mistake, one single mistake, that disqualifies you from 4 of these programs, permanently. And I'm going to share a story about a client I'll call Carol, a 68-year-old retired librarian from Ohio, a careful woman, a responsible woman, who got hit with an $840 surprise bill because she fixed her furnace. Stay with me. If you're over 55 and you pay any of these bills right now, this may be the most valuable 18 minutes you spend this year. My name is Marcus Graves. I'm an enrolled agent. That means I'm a federally licensed tax professional, authorized by the United States Treasury to represent taxpayers directly before the IRS. I'm not a financial influencer. I'm not selling you a course or a subscription in this video. I've spent 19 years working with retirees, and in those 19 years, I have watched good, careful, responsible people lose thousands of dollars every single year, not to scams, not to bad investments, to systems they didn't know they were allowed to push back on. Under IRS Publication 554 US, that's the official tax guide for seniors, there are exemptions and adjustments that apply specifically to people over 65. Most tax software doesn't flag them automatically. Most accountants don't ask about them. Most financial advisors don't even know they exist. Here's the uncomfortable truth. Your bank makes money when you keep money with them. Your Medicare plan has a budget. Your county assessor collects more when you pay full rate. None of these institutions have a financial incentive to reduce your bill. You have to know, and now you will. Let me tell you about Carol. Carol is 68 years old. She spent 31 years as a school librarian in Findlay, Ohio. She retired at 64. She gets $2,240 a month from Social Security and $610 a month from her pension. She owns her home outright, 3 bedrooms, valued at $187,000. She has $41,000 in savings. Carol is not wealthy, but she is careful. She files her taxes every year. She budgets every month. She actually reads her Medicare explanation of benefits, which almost nobody does. In January 2024, Carol's Medicare Part B premium went up by $37 a month. She assumed it was a standard annual increase. She paid it without question because she trusted the system. She'd been trusting it for 68 years. Then, in March 2024, Carol's furnace died, in the middle of an Ohio winter. She withdrew $27,000 from her IRA, her retirement savings, to replace the furnace and help her granddaughter with her first semester of college. Perfectly legal, completely reasonable, the kind of thing careful, loving grandmothers do. In November 2024, Carol got a letter from Social Security. Her Medicare Part B premium for 2025 was going up, from $174 a month to $244 a month, an extra $70 a month, $840 a year, because she replaced her furnace. She called me in a panic. She said, "Marcus, I don't understand. I just fixed my heat. How is that costing me $840 extra every year in Medicare?" I'll tell you exactly what I told Carol and how her story ends at the close of this video, because what happened next surprised even her. But first, you need to understand the exact system that caught her and the 6 other bills that may be doing the same thing to you right now. Let's go through all 7. Bill number 1, Medicare Part B and Part D surcharges. Most people don't know this, but high-income seniors pay extra on top of their standard Medicare premium. It's called IRMAA. The income-related monthly adjustment amount. The 2026 threshold starts at $103,000 for a single person. Now here's the part that catches people completely off guard. Social Security uses your tax return from 2 years ago to calculate your current premium. So if you had any kind of one-time income spike 2 years ago, a home sale, an IRA withdrawal, an inheritance, you could be paying a surcharge right now based on money you no longer have. And there is a legal appeal process. It's called SSA Form SSA 44. Life-changing event request. If your income dropped for any qualifying reason, retirement, divorce, death of a spouse, reduction in work hours, you can file this form and have your premium recalculated based on your actual current income. The average approved appeal saves between $839 and $3,360 per year. The form is free. You don't need a lawyer. This is what caught Carol. And this is what most people never appeal because they don't know they can. Bill number 2. Property taxes. Senior homestead exemptions are available in 43 states plus Washington, D.C. The average savings is between $1,100 and $3,200 per year. Here's why most seniors miss it. In the majority of states, this exemption is not automatic. You have to apply for it. You have to walk into your county assessor's office or go to their website and file an application. Your county assessor is not going to send you a birthday card when you turn 65 and tell you about this. You have to show up. And it gets better. In most states, you can stack 3 protections on top of each other. The senior homestead exemption reduces your assessed value. The senior freeze locks in your assessed value permanently, so future appreciation never raises your taxes. And the circuit breaker credit, available in 18 states, pays the difference if your property taxes exceed a percentage of your income. In Illinois, a senior using all 3 programs on a $210,000 home can reduce their annual tax bill by up to $3,800. Most people pay full rate their entire retirement. Bill number 3. Utility bills. There is a federal program called LIHEAP, the Low Income Home Energy Assistance Program. It's funded by Congress under 42 U.S.C., Section 8621. In 2025, the federal allocation was $4.1 billion. Eligibility for a single senior in 2026 goes up to approximately $22,590 per year in income. If you've ever turned your thermostat down in winter because of the electric bill, you may qualify for a federal program that covers it. That is not charity. That is a federal entitlement you have already paid into through your tax dollars. On top of LIHEAP, 38 states have separate senior utility discount programs. Arizona, Florida, and New York all have active programs with additional monthly credits regardless of income. Bill number 4. Prescription drug costs. The Medicare Extra Help program, officially called the Low Income Subsidy, covers most or all of your Part D drug premiums, deductibles, and copays. The benefit value is up to $5,300 per year. The 2026 income limit for a single person is $22,590. Asset limit is $17,220 DEX, and that excludes your home, your car, and your burial fund. Here is what changed in 2024 that most people missed. The asset test was expanded. Thousands of seniors who were previously disqualified by small savings accounts now qualify. If you are paying more than $35 a month for any single prescription and you are on Medicare, stop right now and apply for extra help before you pay another bill. You apply at ssa.gov/extrahelp. It takes about 30 minutes. Bill number 5. Federal income tax on Social Security. Under IRS Section 86, if your combined income, that's your adjusted gross income, plus half your Social Security benefit, is below $25,000 for a single person or $32,000 for a married couple, you owe 0 federal income tax on your Social Security benefits. 0. Yet millions of seniors have voluntary federal withholding taken out of their Social Security check every month because they set it up years ago to be safe, and they are sending the IRS money they legally don't owe. You can stop or adjust that withholding with Form W-4V. Then file your return and claim the refund. Some people are owed $1,500 to $3,000 they've been giving away every single year. Bill number 6. Your phone or internet bill. The FCC has a program called Lifeline. It gives a $9.25 monthly credit on your phone or internet bill if you qualify. If you live on tribal land, that credit goes up to $34.25. You qualify if you participate in Medicaid, SNAP, SSI, or federal public housing, or if your income is at or below 135% of the federal poverty level. $9.25 a month is $111 a year. It takes 15 minutes to apply at lifelinesupport.org. Most seniors who qualify never do. Bill number 7. This is the one that surprises people. Medicare Savings Programs, QMB, SLMB, QI. These programs don't just reduce your Medicare premiums, they pay them, completely, on your behalf. QMB, the Qualified Medicare Beneficiary Program, covers your Part B premium, your deductible, and in many cases, your copays. The 2026 income limit is $1,255 per month for a single person. SLMB, the Specified Low-Income Medicare Beneficiary Program, covers the Part B premium alone, income limit up to $1,478 per month. You apply through your state Medicaid office, not Medicare, not Social Security, your state Medicaid office. And here is why almost nobody does it. The word Medicaid makes people assume they don't qualify. They think Medicaid is for people who are broke. But these Medicare savings programs exist specifically for people in the middle D, people who have modest income, who own their home, who are on Medicare A, and who are paying a premium they don't have to. If approved for QMB, your Part B premium stops being deducted from your Social Security check. The state pays it. That is $174.70 per month, $2,096 per year, back in your pocket. Here is what to do this week, not someday, this week. Step 1. Check your current Medicare Part B premium. If it is above $174.70 per month, you may have an IRMAA surcharge you can appeal. Pull your last 2 years of tax returns and look at your modified adjusted gross income. If it crossed $103,000 because of a one-time event, go to ssa.gov and download Form SSA-44. Step 2. Call your county assessor's office this week and ask one question. Am I currently receiving the senior homestead exemption on my property? If the answer is no, ask them how to apply. In most counties, it takes 20 minutes. Step 3. Go to medicare.gov/plan-compare and review your current drug plan. Look at every prescription. Ask your doctor if any of your Tier 3 or Tier 4 drugs have a cheaper Tier 1 equivalent. Then apply for extra help at ssa.gov/extrahelp. Step 4. If your income is under $32,000 as a couple, review your Social Security withholding. Call SSA at 1-800-772-1213 and ask what your current withholding election is. If you've been withholding and your income is under the threshold, you may have a refund coming. Step 5. Go to your state's Medicaid office website and search for Medicare savings programs. Apply for QMB or SLMB. If you make under $1,478 a month, you have nothing to lose by applying. When you stack all 5 of these moves together, the property tax triple play, the IRMAA appeal, the prescription audit, the withholding fix, and the Medicare savings program, the average eligible senior saves between $4,000 and $6,500 per year. Not theoretical. Real money, real programs. Open right now. Before I come back to Carol, I need to warn you about 3 situations where you are at extra risk. First, if you are between 63 and 65 and planning to retire, be very careful about large IRA withdrawals in the 2 years before Medicare starts. A $30,000 withdrawal today can push you into the first IRMAA tier and cost you $838 extra per year in Medicare premiums for the next 2 years. The timing matters. Talk to an enrolled agent before you pull that money. Second, if you lost a spouse in the last 18 months, check your Medicare premium immediately. When your filing status changes from married filing jointly to single, the IRMAA threshold drops from $206,000 to $103,000. A surviving spouse who was never subject to a surcharge before can suddenly face one at the worst possible time. File SSA-44 immediately with documentation of your spouse's passing. Third, nearly every program in this video has a deadline. Property tax exemptions close in most states between January 1 and April 1. IRMAA appeals must be filed within 60 days of your premium notice. Missing these windows means waiting a full year to apply again. Put these dates in your phone right now. Now, let me tell you what happened to Carol. When Carol called me, she had 30 days left before her IRMAA appeal deadline closed. She didn't know the appeal existed. Her tax preparer didn't mention it. Her Medicare plan administrator never said a word. We filed Form SSA 44 together. We documented that her husband had passed away the previous year, a qualifying life-changing event under SSA guidelines, and that her current year income was significantly lower than the year that triggered the surcharge. SSA processed the appeal in 38 days. Her Part B premium was recalculated. Her 2025 premium dropped back down to $174.70 per month. We also filed for the Hardin County Senior Property Tax Exemption, which Carol had been eligible for 4 years but had never applied for. Combined with the senior freeze, her annual property tax bill dropped by $1,140. Total first-year savings, just over $1,980. She said something I've never forgotten. She said, "I felt stupid for not knowing. And then you told me they designed it this way. That made me feel better. And then I felt angry. And then I put the money back in my savings account. That's the goal. Not anger, not outrage. Just your money. Back where it belongs." Here is the one number I need you to remember from this entire video. $103,000. That is the IRMAA threshold in 2026. If your modified adjusted gross income crosses $103,000 in any single year, one IRA withdrawal, one home sale, one inheritance, your Medicare premiums go up, potentially for 2 full years. Know your MAGI every year. That single habit protects you from the most expensive and most common mistake I see in retirement. No letter is coming. No alert from your Medicare plan. No phone call from your county assessor. The only person standing between you and these exemptions is you. And now you know exactly where to start. I've put together a free senior bills exemption checklist. All 7 programs, every form number, every income threshold, every deadline for 2026. You can download it right now at marcusgraves.com/checklist. No email required, no sign up. Just download it and go through it this week. And one last thing. If you have a parent, a sibling, a neighbor, or a friend over 60, share this video with them today. Not because it's good content, because they may be paying bills they don't legally have to, and you just spent 18 minutes learning exactly how to help them.